The question isn't, am I giving you, the good product because it's all the same. The question is, how can I, as a salesperson, create a relationship with a merchant that is not going to be superseded by some other guy coming in and cutting the deal with a better price? That's really the question that we were looking to answer.
Hey everybody, James Shepard here with another edition of the Merchant Sales Podcast. I am actually coming to you from a hotel room in Nashville, Tennessee. Had a great time last night meeting with a bunch of you at the event with Green Payments, so that was a lot of fun. This podcast, we're talking to a returning guest, Jeff Moskowitz, who has a very unique company. We're talking about credit card processing rewards. So not credit card rewards, credit card processing rewards. And so it's the idea of providing reward points to merchants based on their processing volume so they can go on, trips and get watches and all kinds of really cool things. So very, very unique concept. They've really gotten a lot of traction in the industry. I think this is one you're going to really enjoy listening to. And then Patty Murphy and I had a little bit of a longer Today in Payments segment today because there's just a lot happening. We talked about AI agents being able to make payments. It's a new initiative that Visa is working on, MasterCard. They've all been rolling different things out so that, when you're using ChatGPT or Gemini, that you can purchase things using a card in that context. So that's interesting. And a bunch of other things that we talked about today that I think are really interesting, some crypto and some other things. So a really great episode. I wanted to mention that this episode is sponsored by Nativia. Really encourage you to head over to nativia.com. You can go to ccsalespro.com/Nativia if you want to learn more about the programs that they have to offer. But if you are an ISO and you're trying to grow your business, you need capital to grow, there's Nativia Financial, which is also an incredible institution to fund your growth, whether you're struggling to look at like, man, we got to finance our hardware costs, or you're like, man, I really want to just grow the business and go through Nativia as my processing company. They have a lot of great options. They have, bin set up, full white labels, all that stuff. So if you're looking to grow your ISO, you got a team, you're doing 20, 30, 40 deals a month, and you're thinking you want to get to 100 or 200, I would highly recommend reaching out to the team at Nativia and talking to them about what they have to offer. With that being said, I do want to mention that our interview today, they're not a sponsor or a paid client of mine. I always like to clarify that. It's just a great interview with a super interesting company doing some cool stuff. So with that being said, let's dive into today's episode. Hey everybody, I'm here today with Jeff Moskowitz. Jeff is the founder and CEO at Tuzo Rewards. How you doing today, Jeff?
Fantastic. Great talking to you.
Absolutely, man. Great to have you back. I think it's been, what's it been, 6 months or something like that, I feel like, since we had you on the podcast, right?
Yeah, it was definitely something like that.
Yeah, it's
Maybe it
been a little
was
while.
like July, or I don't remember exactly.
Oh
Yeah,
yeah,
it's been a
because it was
while.
right before the MWAA, I feel like. So it's been a little more, even maybe 8 or 9 months. So
Yeah,
give our audience, for those who missed the first one, give them a little context of what is Tuzo Rewards, and a little bit of your background of kind of how you ended up, founding this particular business.
sure. So, Tuzo effectively is a rewards program for ISOs and merchants. It's a software as a service add-on that allows ISOs to give reward points to their merchants, just like Amex does or Chase does, and they give points for using your card. This gives the ability for an ISO to give merchants points for receiving payments. Think of it as frequent flyer miles for your business, except it's frequent processing miles, frequent
Right.
processing points, something like that.
Right. And so what were you doing before this, and kind of what was this transition of you deciding to do this business? Because I think the story is kind of interesting. I remember from last time.
It was an interesting one. And we built up multiple ISOs over the years. Me and my brother are partners. We co-founded this together. And back in 2014, no one was doing dual pricing, no one was doing cash discount.
Right.
And we kind of saw that there was an opportunity. We went to a bunch of processors, and everyone told us we were out of our mind and no one's actually gonna pass fees to their customers, as I'm sure you've probably heard of from
Yes.
100 people.
Right.
And we went to tons of processors, and eventually one specific processor, JetPay, said, we don't have a way to add the fee on the front end, but if you could figure out a way to calculate the fee on the front end,
Right.
we'll pull it out on the back end. So we built a gateway, licensed it to them, and we built up a fairly large book pretty quickly with them over a period of like a year and a half. JetPay sold in 2018 to NCR. We kind of went back to drawing board, did another book, some other stuff that we were doing. technology pieces. Being that we built a gateway, we were involved in point of sale systems. And basically during COVID, no one was selling processing. Everything was shut down. So we didn't know what to do. So we took some cash and we started investing in luxury watches because we like them and, it was fun. Ended up being a pretty big business. We were doing, several $1 million in sales a year, $3-5 million in sales a year is pretty crazy. One of our clients turned out to be this guy in Texas, had a barbecue joint. We didn't know any of this when we were selling him watches. And on a phone call, he mentioned that he was, super annoyed because his processor was holding his money or something. I don't remember the exact details. My brother was like, "Hey, do you pass the fee to your customers? Do you pay the fees?" And he was like, "Oh, it's crazy. It's horrible. I'm processing between, 800 and $1 million a month. And I'm paying a freaking fortune in fees, $30,000, something stupid like that." And my brother was like, "You could just pass the fee using this dual pricing program." And the guy was like, "Oh, let's do that." We got him demos for point of sale systems, spent literally weeks trying to get this guy moving. Finally, he decided on a point of sale system, ready to go, super excited. He's like, "My wife's out of town. As soon as she gets back, we're going to sign and we're going to launch." We call him up, whatever it was, a week later, so 10 days, I don't remember exactly. And he's like, "Oh, yeah, thanks for calling. You'll never believe this. A guy walked into my store right after I spoke to you, and he was like, I have the exact same point of sale system. I had the exact same program. I signed with him and it's being installed tomorrow." And we were like, "What the heck?"
Right.
So my brother, being pretty wise and fast on his feet, pulled out his phone's calculator and he was like, doing that. And all of a sudden he's like, "You know that Rolex watch you want to get?" And the guy's like, "Yeah." He's like, "I'll make you a deal. Drop that guy, come back to me, and I'm going to give you that Rolex in 6 months." And the guy's like, "Are you serious?" My brother's like, "Literally, I'll put it in a contract." And the guy's like, "Done." And that was the birth of Tuzo. We realized something that, I mean, everybody knows this, but it's like that realization was a big deal. We sell a commodity. You're processing, my processing, the other guy's processing. We're all selling the same stuff.
Right.
We all effectively have the same equipment. We have the same pricing, more or less. You're not really able to get rid of interchange. We can, do our best, but
Sure.
effectively, it is what it is, right? So
Right.
you selling, that guy selling, another guy selling, we're all selling the same commoditized product.
Right.
The question isn't, am I giving you, the good product, because it's all the same. And
Right.
to be honest, they're all processing through the same backends too, whether
Right.
it's Fiserv or TSYS or whatever it is.
Right.
It's literally the same product. So the question is, how can I, as a salesperson, create a relationship with a merchant that is not going to be superseded by some other guy coming in and either cutting the deal with a better price or lowering, the fees to the customer, whatever it is? That's really the question that we were looking to answer. And what we realized is merchants don't honestly care, right? Whether if they're passing a fee,
Right.
84 cents or 92 cents, it's the same thing.
Right.
Like the people who complain about 84 will complain about 35, they'll complain about 92. It doesn't matter, right? That's all the same. The question is, why should that guy go with me versus you? And if you come into the store after I already sell it, how are we going to make sure that that guy doesn't say, "Yeah, you know what, I'll switch"? Because, as someone who had a book for years, half the time we didn't even know there was a problem until the guy
Right.
switched, right?
Right.
We didn't know what was going on. And all of a sudden there's like, "Hey, your residuals went down. This guy's out." And you're like, "What? That was a month ago. I have no way to know that." And if that's an issue, there's another issue. I only spoke to my merchants when they were pissed off. I
Right.
never get to speak to merchants when they're happy because, to be
Right.
fair, you have a sales team and we're out there running and selling. When am I picking up the phone and being like, "Hey, buddy, did you get your batch today? Awesome, good job." Like
Right. Like, well, there's nothing to talk
that
about.
never happens because
Right.
there's nothing to talk about.
Right.
What Tuzo's done is it has created a whole bunch of things. Number one, is created relationship building tools and touch points. If anyone knows anything about sales in any other industry, the more touch points you have with a merchant, the more likely they are to remain your customer. The
Right.
problem is, in processing, I do that in the very beginning when I'm prospecting my deals. But once I have a merchant, there's nothing to talk about. So now what do I do?
Right.
Right? Like, "Hey, is everything good?" "Yeah, it's good. Thanks." Done. That's the end of the conversation.
Right.
Imagine being able to be like, "Hey, I see that you're saving up towards a trip to Cancun with the wife. That's really exciting. When are you guys planning on going?" Oh, it's going to be this and this. Oh, well, you know what? Here's 10,000 bonus points because I love you. You're one of my favorite merchants. Here's 10,000 bonus points to get you towards that trip.
Right.
If you can do that, you've shifted the entirety of the relationship away from this commoditized thing that everyone
Mhm.
else is selling to this really just positive experience. And every time the guy logs in and he sees points being earned daily, every single day,
Right.
all of a sudden, he's like, wow, James is the best. James is hooking me up, and whether or not the guy's aiming for a Rolex watch or a trip to Cancun or he's getting a gift card. I mean, we had a story. This is so interesting. A lady redeemed $500 in gift cards to Lowe's. I was like, Lowe's? Like,
Right.
like
Right.
I hear lots of things like Amazon. I hear all kinds.
Right. Right.
Lowe's? All right. I'm curious why. The agent picked up the phone. He's like, hey, I see you redeemed $500 in gift cards to Lowe's. That's super awesome. What are you doing with it? And you know what she said? And this is so cool. She said, I bought a barbecue grill for my backyard for the summer. And he's like, dude, that's so sick. That's awesome. What kind of grill? She's like, oh, it's like 5 burrs. And she told him all about this grill. Like, he doesn't care
Right.
about the grill necessarily. But
Right.
when he hung up that phone, every single time she uses that grill, he's getting credit for it.
Right.
And
Exactly.
that you can't replace that with anything. That's not a
Right.
commodity anymore
Right. Right.
because he's involved in her family life now. He's involved in her kids playing in the backyard while she's flipping burgers.
Right.
There's something very unique about that type of relationship. And she
Sure.
said thank you a million times to the agent and was super excited,
Yeah. Sure.
and I think
Well, it's
that's
so
the
cool,
value.
right? It's so cool for that, especially I feel like for that agent that's like in person, the local agent, because it just adds so much
Yeah,
context to the relationship. So, all right, so let's do this, Jeff. Let's zoom out here. I'm gonna break this down and make sure that we understand what we're talking about. Okay, so we all understand reward points. So we think about this more on the issuing side, right? So it's like I have a Amex rewards card. My reward points add up to trips and, cashback rewards and all this kind of stuff. Okay. So we understand
sure.
that. So I think what we're saying here is Tuzo has created the same concept of reward points, but rather than on the issuing side, it's on the acquiring side. So we're saying for every amount of every time you process volume, every day when you batch out, you're earning reward points that in the same way you can redeem. Did I say that right?
You got it exactly right. And
Okay.
the cool thing is that the ISO determines how many points you earn as a merchant.
Right.
So we stay out of the earn side of this.
Right.
Our focus is on the reward side, the creation of the content within the app so that people can redeem for amazing, curated products and all that good stuff. And we handle the redemptions and we handle the creation of the points. But the ISOs can you leverage the points to gain X, whatever X is.
Right.
So just imagine you're a merchant and you're an ISO and you walk into a merchant and you say, hey, process with me and you're going to get 1 point for every $10, which is 10 basis points, right? 1 point for every $10, 10 basis points. But if you go to 399, because right now you're at 3.25. If you go to 399, I'm going to triple that and I'm going to give you 3 points for every $10. Now, do the math on what just happened. The guy is at 3.25. The ISO takes the merchant to 399, which is a 75 basis point increase. He's taking 30 basis points out to give the merchant a reward, and he's still netting real money. He's getting new money. It
Right.
used to be if I walked into that merchant at 3.25, how could I get that merchant to move over? Well, there was effectively only one way. I'll do it for 3.
Right.
Doing it for 3 is throwing 25 basis points in the wind. Right?
Right.
That's literally what you're doing. You're like, yeah, I'll lower it. Why would we lower the rate? Lowering the rate means I'm making less. And by the way, it's the race to zero that's happening right there. That's not effective. It's not exciting.
Right.
It doesn't help anybody. By the way, it doesn't
Right.
even help the merchant, to be honest, right? Because you're talking about a difference of 8 cents, 12 cents, 20 cents.
Right. And they're passing
Like,
it on
what are we
anyway.
doing?
So right. Right. No one's
The
gonna
best
care
thing
about
is like,
this.
what are you talking about? No,
Right.
right?
Right.
So instead of throwing basis points away, right? Let's see how can I leverage rewards to get those basis points back in my pocket
Mhm.
and make sure I'm making more money. So that merchant in that example, he's netting an extra 45 basis points over what he was going to get. Well, that was at 399. In this case, it was 3.25. up to 399, he's netting an extra 30 basis points, 20 basis points, whatever it is.
Mhm.
But it's free money.
Right.
And the guy's not going anywhere. No one's
Right.
going to come in, and if someone comes in, he's like, I'll take you back to three and a quarter. Dude, I just got a grill. I feel like
Right.
I
Yeah.
just got a
Well,
barbecue grill from
what they're gonna,
and
what they're gonna ask is they're gonna say, well, what kind of rewards do I get? And the person's gonna say, what are you talking about? So
well,
it's like a whole different
that's the
paradigm.
funniest thing. That's actually we have an agent and it's fascinating, but his pitch is I mean, I laugh every time I talk to him because his stories are nuts. But he literally walks into merchants, he's like, hey, you got a Clover? That's super cool. What kind of rewards are you getting? The guy's like, I don't what reward? I don't know what you're talking. It's like, whoa, you're not getting rewards? You have a device that qualifies. I can't believe you're not getting rewards. Never mind. Like, I'm sorry, I didn't mean. I don't want to mess up your day. And the guy's like, no. What are you talking about? And then he pulls out his phone or his iPad. He flips it around. He shows them the rewards. And next thing you know, the guy's filling out paperwork. This guy's doing 2 to 3 deals a day by himself.
Yeah.
No appointments. Like
Right.
that's
Yeah.
crazy.
Yeah. Yeah. It's nuts. All right. So one last thing I want to break down here before I got a few questions about kind of the implementation, but I want to make sure that our audience understands. So, you have this like marketplace. So, all right. So you're facilitating this where I'm an ISO. I can give my merchants reward points. I, pay you like there's some cost associated with this. You're managing this platform. Help me understand that from a merchant's perspective. What's my experience as a merchant? I like log into some kind of a dashboard, or what do I do as a merchant?
Yeah. So every merchant, well, let's start with the ISO. The ISO, when they sign up with us, it's a software as a service. They sign up, they get the software as a service. We provide them with marketing material and stuff that they can go out with, and we provide them with an admin portal that they can log into.
Okay.
In that admin portal, anytime they board merchants, they can see how many points the merchants earned. They can see if the merchants redeemed anything or if they're gonna redeem things that are like in their shopping carts and things like that. Those are features that we're adding right now to be able to like have oversight and insight into what's happening. The merchants get their own login that's given to them as they sign up. So this has nothing to do with the ISO side of the relationship. The ISO boards the merchant the same way they usually do. Everything's exactly the same. Once they have a mid, then they come to us, plug that mid into our system, assuming we have a data connection, which we have a whole bunch of them already set up. Data will feed into there, and now the merchant gets an email that says, hey, welcome to Tuzo Rewards on behalf of James or whoever.
Mhm.
Then the merchant logs in, and the second they're in, they see on the bottom of the first screen all of their processing volume. So I'm this and this date, I batched out this much money, and I get this many points, et cetera, et cetera. Then there's a separate section where they can see all the rewards that they can redeem, and that's literally updated and curated regularly. We're constantly adding things from trip packages to electronics. I think we just had a whole bunch of golf equipment added in as like an outdoor gaming thing. So we had some requests for stuff like that. All kinds of really great stuff. And the merchants have their own direct experience with the rewards, but it's all coming and it's all curated and it's all every email. Every email to the merchant is saying, because you process with James, you just earned this many points.
Hmm.
If James wants to, if you wanted to, you could even issue bonuses directly to your merchant. So think about it from a retention department perspective. A guy calls up, he's like, I didn't get my badge. You guys suck. I want my money and I'm out of here. Well, there's very little you can do today without a reward. You're basically dealing with an upset customer. There's nothing to say. I'm so sorry you're going to get your money. I'm going to work on it. We're dealing with it. We're seeing you'll have it tomorrow. Fill out
Right.
this form. I need an invoice, whatever.
Right.
Well, what if instead of that, you could be like, oh my gosh, I'm so sorry. First things first, I'm putting 10,000 points into your account right now. I want you to double check and make sure you got it. Now, let's deal with the problem. What you've just done is you've lowered the volume on this tension that's existing and created a positive touch point. Plus, if he leaves, he loses the 10,000 points you just gave him. So
Right.
now he's incentivized to stay. So
Right.
all kinds of cool stuff like that. But all of that is in relation to the merchant. So the merchant
Right.
is getting all these positive touch points from the ISO, and the merchant has their own login experience. The ISO has their own login experience.
And so is there like a standardized kind of like cost per point or something like how do the ISOs? I know that because I guess if I'm understanding it right, there would be two cost components here, right? There's the cost to you guys like as a SaaS,
product, but there's also this cost of like these trips and all. Like, how does that work? How does the ISO cover that?
Yeah. So the ISO determines how many basis points they want to set aside for any given merchant. And it
Okay.
could be 5, 10, it could be 2, it could be 100, it could be whatever they want. And again, a lot of our partners are leveraging the points and creating tiers. Like if you do this, you get this many points. You do that, you do that many points. From our perspective, we just charge a management SaaS fee, which is essentially 10 basis points as an override and $5 a month per mid. 90% of our partners are passing on that $5 a month as a rewards access fee, which is basically a
All right.
statement fee that they're throwing on. And most of them are charging anywhere from $7.99 to $14.99. And the reason they can do this is because if you look at any rewards credit card, like an Amex or a Chase Sapphire card, these guys charge like $400, $500, $600 a year for
Right.
access to the cards with rewards points. So we don't have to train merchants that there's a value there.
Right.
Amex spent billions of dollars in creating marketing.
Mhm.
Chase spent billions of dollars in creating marketing so that there's Super Bowl ads telling Mr. Merchant that it's a really good idea to get points.
Hmm.
So we're just kind of like piggybacking on that value add.
Got it. So really, I guess actually when we say a point in this context, we really are just talking about a basis point on volume. Is that okay? So that's cool.
That's
So now
exactly.
I wasn't sure if there was actually a
Well,
direct
there's
connection
two.
there.
There's actually so the earn side is basis points. The redemption side, every point has the same value as an Amex or Chase. It's basically a penny a point. So on the redemption side, the
That's
merchant
different.
sees how many points they earn. So
I
let's
see.
use simple numbers. If a guy's processing $100,000 and he's getting 10 basis points,
Right.
right? So he gets $100 in basis points, which equates to 10,000 points because it's a penny a point. So when he looks in his in his book, when he
Got
sees
it.
how many points he's got in the app, he's got 10,000 points.
Got it.
But the ISO allocated 10 basis points to the merchant. We build that ISO 20 basis points and $5. The customer got $100, and then we collected our fees on that side.
And so and then you guys are like basically, kind of automatically, I guess, pulling in this funding from that merchant account. You're pulling those basis points in to cover the cost of the
So
program.
we bill at the end of the month, and this is actually a really
Got
cool
it.
tool. There's pending points
Mhm.
and there's available points. We always want as many points pending as possible. So we bill at the end of a quarter, or sorry, at the end of a month based on the residual payouts. So we come from the ISO world. We understand how
Right.
the payments work. So we're always going to be billing that way. And we do it on purpose to ensure that there's always that lag time between pending points and available points. Because if a merchant's looking in his account, he's got pending points. He's like, oh, well, even if I'm upset, I can't leave because I don't want to lose my
Right.
pending points. Here's the
Right.
thing. There's always pending points because they're
Right.
always going to be arrears because everything's always backed up against the residuals.
Right.
So there's always pending points. And what
Got
we
it.
do is we bill at the end of a month for the previous month. Once billing's paid, we
Got it.
release
So you do it
points.
just based on that same kind of industry standard residual schedule.
Industry standard exactly.
Got
And
it.
we built it to match what everyone is expecting because
Sure, I
that
love
makes
it.
sense.
Okay, so we've talked about kind of the sales component of this, which is really cool. The idea of like walking in and kind of talking about reward points I really do think it's one of the best lead-ins I've heard in the last 10 years, especially when it's that traditional merchant account. You're going in there selling a Clover device or a standard terminal or something. It's fantastic. We talked about that. We talked about retention a bit. One other one you brought up to me earlier that I thought was pretty cool was the activation side. So talk about how ISOs are using it when the merchant doesn't want to install or activate the terminal yet.
Sure. So we didn't even think about this as a value add, to be honest. When we first launched this, it wasn't
Yeah.
part of our, thought process. But what was happening is we were getting phone calls from our partners. They're like, our activation time is skyrocketed. And we're like, well, explain. Like, what do you mean?
Right.
Well, as I'm sure everyone who's listening and selling a merchant doesn't equal getting paid.
Right.
Because if that merchant doesn't turn on that terminal and start using it instead of the terminal he currently has, I get nothing. Right? So I'm sitting here waiting. Terminal ships. I'm excited. I check tracking. It got there. I call the merchant. Hey, you got your terminal? Yeah, I got it. Today's crazy. I'm going to install it tomorrow. Tomorrow comes, no answer. The next day, yeah, no, I'm getting to it on my wife. I have to take her to the doctor. There's always a reason.
Yeah.
It's a constant battle to try and get that guy to activate the terminal. We've had partners leverage the points to be like, hey, you're not earning if it's not active, right?
Right.
And the guy's like, oh, yeah, I'm plugging it in right now. Or we've had scenarios where someone will say, as soon as you activate your point, as soon as you activate your terminal, I'm throwing 2,500 points in there to get you started.
Right.
It's $25.
Right. It's not really a lot of money, but it sounds like a lot.
It's not going to break. It's not going to make or break your merchant accounts as you're building them, but you're going to get activations to happen much faster. And the other thing that I found to be like fantastic, again, not something we necessarily thought of, but upgrades is like insane. Like we've had ISOs who took their book and they looked through it and they said, hey, I have this many accounts that are not at 399. They're at 3.5, 3.25, 3%, dual pricing, or they're on traditional processing. We've had small ISOs give themselves $10,000 bonus, $10,000 residual increases simply by picking up the phone and calling their current book. They're not selling any new business. They're saying, hey, James, how you doing? Oh, I'm good. I was looking at your account and I noticed that you qualify for our brand new rewards program. Oh, really? Well, what is it? Well, you know how every time your customers use their card, they get points? Yeah. Well, now every time they use their card, you get points. The guy's like, well, what do I have to do? How does that work? Well, here's how many points you're going to get. Here's how it works. Here's how you're going to get your, X number of points a month. And they do the math and figure it out for them. Would you be interested in using this? And looks like in 12 months, you're going to qualify for a trip to Cancun with the wife. How does that sound? Merchant says, sign me up. Like, I don't understand. What's the problem? Right. And they're getting merchants to sign long-term contracts or just simply increase from 3% to 4% or 3.25% to 4%. Those upgrades are fantastic. And we've had like crazy experiences having merchants call us ISOs call us and be like, I just upgraded 25 accounts. I just upgraded 100 accounts. And they're just like freaking out because the amount of money that they're increasing is crazy. And then we even had one guy who is he's a broker of books. He buys and sells books. Yes, that's what he does. He was like, I love this. Every single time we buy a book, I'm going to take the book I bought for X multiple, implement rewards, and I'm going to bump my residuals up by X percentage. Now the book I just bought is worth X much more, right? And he's had people who are selling books to him who are like, oh, we're interested, but give us a couple of weeks. And they start implementing rewards and they come back and they ask for a higher multiple. Right. So we're seeing the value of the books are going up, which is amazing. And again, we're a relatively young company. I mean, we've been around from the technology side, we started over a year and a half ago, because building it all out. Right. But when we spoke last time, I think we were just literally launching, and we went from counting accounts in the tens to counting accounts in the thousands at this point. And it's been quite the excitement. Yeah.
Love it. Well, Jeff, I think this is such a creative, interesting topic. I can't wait to see the retention stats in 24 months, 36 months, right? As you start to get those stats rolling in. But before I let you go today, I definitely want to make sure I give you a chance to give the information here. So for those who want to learn more, ISOs that are interested in the program, agents want to reach out, where would you send them to learn more about the program?
So, you can check out TuzoRewards.com, which is our website. We have some forms on there. You can easily get in touch with us. I'm literally Jeff at TuzoRewards.com. My partner and brother is Hirsch, Hersh at TuzoRewards.com. You can find us there. We hit up all the major shows. I think we're going to be at Western, Midwest. Sure. We were at the Northeastern show a month and a half ago. And we try to make sure that ISOs know we exist, because when we meet people, especially at these shows, we're hearing from them, oh, you're a rewards program for merchants. And they think that means that we're giving reward points that merchants are giving to their customers. But that's not what we are. We're the exact opposite. Right. And once they realize that, it's a whole different game. And it's just been very, very exciting. We even had a scenario, which I'll end with this, but I had a scenario where a large account, a couple $1 million a month, the ISO was trying to get it closed, asked us to help him with the demo. We did that. On the call, the owner of the business, who's doing millions of dollars a month in processing, was like, points are cool, but like, I have a jet. Like, I don't really I don't need a trip to Cancun, and I don't know what I'm gonna do with an iPad. Right. And on the call, the chief marketing officer was like, I want the points. And we were like, okay. And the owner was like, why? He's like, we're going to leverage the points to give rewards to our own clients or our
Sure.
agents or our managers. So we have large groups giving, bonus points, 50,000 points to their manager who's doing a great job, or,
Right.
giving
Sure.
away an iPad to their customers that they're
Right.
not paying for. And that was very surprising to us also. But,
Yeah.
you
Cool
know,
stuff.
we'll see.
Yeah, I love it. Well, Jeff, thank you again so much for taking time to join us today. I'm sure
Pleasure.
we'll connect again here in a little while and see how it's going. But thanks so much for your time. Really appreciate it.
Awesome. Thanks so much, man. Have a great one.
Well, James, we started talking about this last week, but just kind of briefly. Um, the big three payments companies, MasterCard, PayPal, and Visa, are in a race to the new frontier of digital commerce, agentic AI.
Yeah.
All three have now introduced initiatives where AI agents can complete purchases on behalf of consumers. Ryan McInerney, in a live stream they did earlier this week, said, quote, these technologies have the potential to radically transform commerce, to radically transform how we shop, how we all buy, and how commerce works at its most fundamental layers.
Hmm.
Visa's working with Anthropic, Microsoft, Mistral, OpenAI, Perplexity, and others to integrate payment capabilities into AI chatbots. When people use a chatbot to shop, they will also be able to use AI agents to pay for purchases.
Hmm. So I haven't really looked into this much. I mean, I've definitely heard the rumblings, but I haven't really seen it. Did he present any information on kind of how does it work? What's unique about it? How are they securing like to make sure that the AI isn't just buying things they're not supposed to buy? Or I would imagine that's been
Right, right, yeah, and all three have like intelligent commerce, um, and so forth. The tokenization is sort of at the root of it.
okay.
It plays a major role in both Visa and the MasterCard initiatives.
Okay.
Okay, as we know, tokenization is a cryptographically protected token that's linked to the consumer's card.
Right.
Think of it as like giving AI agents its own credit card, but with strict parental controls.
Interesting. Yeah, I guess because that would be the thing, right? It's ultimately the controls is it's like getting an AI agent to be able to use a card is easy. Making sure the AI doesn't use the card when it's not supposed to is hard.
And that's the thing that I find a little bit disconcerting myself. I mean, I you know, it's convenient, but it can also redefine fraud,
Well,
right?
I would have, yeah, it could. I think the way I would kind of envision it, and again, I haven't looked at it, but the way I would envision it would be that, OpenAI would first of all, there'd be that authentication of the user. So it's like, okay, I know that this, they know it's me using it, right? And then
Right.
they probably will have to have standardized responses or something where before the AI actually completes a purchase, it will say, are you sure you want to spend $87.31 on this? And there'll have to be some kind of probably standardized statement and response that then allows that token to be used. That's going to be something like that, I would think.
Yeah, exactly. And that's what some of the things that I've been reading about have been telling me is that there has to be a lot of trust built into the system, and
Right,
also needs to be a lot of communication.
right.
Say AI chooses product X over product Y, right?
Yeah,
Consumers are going to want to know the basis of that decision. Why
yeah,
is why is X so much better than Y?
right, right. Hmm.
So um, and I also it to me the thing that really kind of troubles me is that the fraud potential, right? And especially quote unquote friendly fraud,
Sure. Oh, yeah, you could say, oh, my AI agent bought that. That wasn't me.
right?
Yeah,
Right?
yeah, they'll have to have that'll be a whole new thing of like chargeback handling and everything. Yeah, that's a good point.
Yeah, yeah. I mean, it kind of reminds me. I remembered I had a friend a couple years ago. She let her son use her credit card to do online gaming, right?
Right, right,
Then suddenly she started getting all these charges on her card for online porn sites.
right.
he wasn't playing he was playing games, but not the same kind of games she thought he was playing, you know.
Right,
I mean,
right,
you know, he was like a 20 something and you know,
right. Huh.
yeah. So,
No,
so
Patty, you know what is so interesting to me about this is the more I'm thinking about this as we're talking is like I think there's this existential risk to our industry right now of decentralized payments. Like, one of the things you think about, I think we all in our industry have this concept of a merchant account as a merchant has a merchant account, which is how they accept payments.
right,
And I don't know if that's going to be true as we move forward, meaning you look at a restaurant right now. Well, they also get payments from Grubhub and DoorDash and Uber
mm-hmm,
Eats, right?
mm-hmm,
Groupon or there's all these. You're going to have some crypto payments at some point, kind of starting to filter in a little bit more heavily, and so you have all of these other ways that people can pay. Buy now, pay later is going to be in there, and now you're also going to have AI, coming in to where in other words, if OpenAI, if ChatGPT is making a purchase on my behalf, then that purchase it is going to go. It's going to be very interesting to think about, OpenAI and these other big tech companies, if they're going to start to try to grab some of the acquiring piece, where you could have a lot of these situations where it's like, okay, the merchant has a merchant account. They do really, there's $100,000 a month in revenue coming from card payments, but
right,
but the actual merchant account is only capturing half of that,
right,
and the other half is coming from these other decentralized kind of payment sources. So that'll
mm-hmm,
be an interesting risk to kind of think about in terms of um, how we accept payments. Now, I guess if we're thinking about an AI agent making a purchase, well, you would assume that that means that the AI agent is just using a card in some kind of a normal checkout flow. So
right.
that should still go through the core merchant account, I guess, but it'll be interesting to see how that plays out.
Yeah,
So,
I really think there's a lot of things up in the air about this.
oh, for sure, and it'll evolve so much over the next few years. But this is definitely keep us in the loop on this. This is a very
Yeah,
interesting development.
this
So,
is a very interesting development. I had a meeting the other day with some friends. Actually, it was with the Green Sheet people,
mhm.
and you know, Kate Gillespie, who's you know
Right,
the president. She's like, I just don't like this idea. You know, like it just strikes me as like a whole new era of fraud, like a whole new
mhm. Yeah,
dimension of fraud.
yeah. Well,
And
it's
you know,
definitely coming.
I think,
Nobody's going to
yeah,
stop it at this point. So,
yeah, exactly.
yeah. All right, what's our next one, Patty?
Our next one is on stable coins.
Okay,
So Visa says it wants to use stable coins to support cross-border payments.
of course, that makes sense.
Makes a lot of sense. You know, stable coins is just we've explained it in the past, but I'll explain it again.
Yeah.
They're cryptocurrencies that are tied to fixed assets, fixed values, you know, like fiat currency, which makes them a steadier store of value than, say, crypto coins like Bitcoin that are, you know, right?
Right.
But one obvious use for stable coins is the remittance markets. Um, and that was brought up. Nacha had its annual convention last week, and there
Okay.
was a Visa executive there that was talking about that. You know, he said that remittances are a major method of sending money. You know, well, as we know, they're a major, you know, way of sending money to friends and family, you know, back home, right? But they can be expensive.
And Patty, for our audience, it's newer to payments. What is remittance?
A remittance is when you are sending, well, it can be a couple of different things, but in this context, it's sending money from point A to point B.
Right.
Usually from the US to a third world country.
Right. Right. That's usually the context is I need to send money to someone that traditionally would be hard to send money to. I guess.
Right. Yeah, like you know, a lot of it is like, you know, you have these people that come to the US, they get a good job, they want to help the family back in India, they
Right.
make remittances
Yeah.
back to them.
Right.
I mean, so that's different from like remittances like in the corporate world.
Right. Well, that's what I was trying to clarify. And I think, again, the stable coins, we have the cryptocurrency technology making it very inexpensive to exchange value over, it doesn't
Right.
matter if it's in another country or not. But it takes the volatility out because it's going to be pegged to the US dollar. They're going to be using like US stablecoin or something like that. So
Right.
yeah.
Right. And that's really interesting. So, Visa CEO Ryan McInerney suggested in a call with analysts that the path to stablecoins isn't wide open yet. He described a milestone in which Visa recently settled a cumulative $200 million stablecoin, transaction with stablecoin payments. But he added, quote, a very small portion of our overall settlement value is represented by this.
Of course.
So I also wanted to just mention that in a related development, there was legislation in the Senate that was supposed to come up for a vote just yesterday. It would have, yesterday being Thursday, the 8th.
Yeah.
Okay. And it was, would have created a detailed framework for regulating stablecoins. It's called the Genius Act, which stands for Guiding and Establishing National Innovation for U.S. Stablecoins. Don't you love the way they come up with these acronyms? Like,
Well, they probably use ChatGPT to come up with that.
yeah. But before ChatGPT, we
No, that's a
still had
good
these
one.
kind of
Yeah.
things, right? Like that they have like somebody on staff whose job it was
Right,
just
right,
to
to
come
come
up
up
with
with these
these things,
acronyms. Yeah.
with these acronyms.
Funny. Yeah.
So anyway, the legislation is stalled in the Senate. It would have created a detailed framework for regulating stablecoins,
Okay.
and it needed to have one of those 60% votes to get on the agenda, and that failed.
Really.
Yeah. And so, but here's another interesting thing. This all comes as the Office of the Comptroller of the Currency, which has, for folks who may not know, they regulate the big national banks and the like the B of A's and the Wells Fargos and so forth, as well as smaller
Right.
banks. Um, they have ruled that the banks it regulates can now buy and sell crypto assets like stablecoins on behalf of customers. It was in an interpretive letter that was released this week. It also stated that banks can outsource crypto asset services to third parties.
Wow.
That's a big change.
Yeah. Okay.
Yeah.
Stable coins are going to be continuing to develop. Yeah. Wow. Very
Yeah.
cool.
Yeah, I think that's a really interesting, kind of switch around because, and again, I think it also has to do with the change in administrations. There's a different outlook on regulation, you
Well,
know.
right. Well, and also the Trump administration seems to be really bullish on crypto in general, right? Just, from
Yeah,
a lot of
and
things
and
that happen with that. So,
there's part of me that wonders if this stalled legislation has to do with that, with all of this, uh, crypto coin that the Trump family has been putting out, and the they just seem to be really bullish on crypto, and and there's a lot of on the other side of the aisle, there's a lot of apprehension about that.
yeah, sure. Yeah. That'd be really interesting to see how it all unfolds for sure. So,
Yeah.
okay.
So
What's our next one, Patty?
here's an interesting one. A major technical outage last week brought the P2P payment network Zelle to its knees. Actually,
Really?
it was over the weekend. I don't know if you heard about this,
Not bad. Mm-mm.
but it left millions of Americans unable to send or receive money through their bank accounts. In some cases, they even saw like duplicate debits to their bank accounts.
Oh, wow.
Yeah. Some
Goodness.
of the largest financial institutions were caught up in the snarl, including B of A, Truist, Capital One, and Navy Federal Credit Union.
Oh, wow. And
And
this was the result of a cyber attack or just
it was an internal glitch at Fiserv.
at Fiserv, really?
At Fiserv, yeah. And that's what was really interesting because,
Oh, wow.
you know, um, it didn't only affect Zelle, but also Fiserv's big into the ACH arena.
Right.
So, you know, that was a problem as well.
Somebody had a
Uh,
really bad day at Pfizer.
yeah, right. Yeah, they said the stock kind of took a hit after that, as you can imagine.
Uh,
So,
that's really interesting. I know Zelle is just used by so many people now. It's kind of I personally don't use Zelle, but
I don't either, but a
common.
lot of my friends do.
Right,
You
right.
know,
Yeah,
um, Zell's appeal obviously lies in speed, convenience and lack of fees for most transactions.
right.
Here's the growth, which I think is really interesting. It processed over $15 billion in transactions in 2018. In 2023, it handled 500 billion.
Wow.
Today,
Starting to be real money.
yeah, right. Today, more than 1,800 financial institutions participate in the network.
Yeah,
Now, it's important to remember that Zell's come under fire for its perceived lack of consumer protections.
right.
Last year, the CFPB sued early warning services and three of its largest bank owners for failing to protect consumers from fraud. But
Mhm.
that case was dropped in March, one of many complaints that were rolled back by the Trump administration. Um, but, and here's another interesting thing that I thought was really interesting. In statements, you know, it's kind of a zinger, actually. I think it's like when all this started unfolding, when everybody was getting caught up, that was using Zelle. In a statement to users, told users to consider using other platforms like Venmo, Cash App, and Apple Pay.
Yeah.
That's kind of interesting that you would say, "Hey, we screwed up. Go to one of our competitors."
Competitors for a little bit. Well, and I think they know that most people kind of do have multiple solutions. I think, the other thing I do think that it's so interesting to me how all this is transpiring because there's such a delicate balance between, overregulation and protections. And I
Right.
think to me, it's always a question of timing where it's like, are these platforms far enough along? Now, again, with Zelle, I mean, it's like, $500 billion is pretty far along.
Yeah.
You
Yeah.
definitely don't want to stifle the innovation, and so you want to, give these platforms an opportunity to scale up and kind of take the handcuffs off. But then at some point, when do you kind of jump in and say, okay, like now we got to think more about what is the effect on society, what's the effect on on consumers, and so it's always about it's interesting because crypto's in the same spot. I feel like crypto payments and Zelle and these P2P, it's like at what point do you say, okay, we need to put because you put those regulations in place, there are other countries who are not going to regulate things as heavily, and so
So we just move.
right, and so they're going to have more innovation is going to continue there because the business is not tied down with regulatory compliance and all that. But at the same time, so it's a balance. I think it's interesting to see how different administrations handle these things, and I think in some ways, I think our two-party system is good in this way that I feel like we kind of end up swinging pretty far in one direction, then we'll kind of swing back in the other direction. And I think over the long haul, I think it has worked pretty well for
We
the
get
for the
kind of
US.
someplace in the middle, you
Yeah.
know.
Well, it's
Yeah,
funny. It's never in the middle, right? It's always like it swings this way and then it swings the other way. So the net effect over 20 years is it's in the middle, but it's
right.
actually swinging back and forth with it. You know what I mean? Well, so Patty, I think is there one more still today?
One more, and this is just a real brief one, but I kind of saw this coming, just not who or when.
Okay.
HSBC has launched a new financing tool that U.S. clients can use to pay for import duties.
Oh, of course. Yeah. Okay.
Right? Trade pay for import is what they're calling it.
Okay.
And they say it simplifies the payment of import duties.
Okay.
You can pay the duties directly either through pre-agreed credit terms with brokers or direct ACH credits.
Okay.
I
Yeah.
thought that was really interesting. It's an attempt to, HSBC's attempt to ease import duties for clients, comes at a point when most Americans are bracing for higher prices on a
Sure.
wide range of goods, because of the announced tariff plans. Um,
Yeah,
as
we've
as
seen even in our own industry, just in the last couple of weeks, we've seen multiple companies come out, hardware providers come out and say, "Hey, we have to do a price increase." And so, this I talked to who was I talking to the other day? One of the ISVs that we work with at Full Stack Payments,
uh-huh.
and issue was we're financing the hardware, so we're doing a deal where we can give the merchant the hardware for free, right, and then we're financing it. Well, I had to obviously to do that, I had to understand the cost of the hardware, right?
Right.
So I was like, hey, I need you to send me the hardware cost, and he's like, well, I'll send you two. He's like,
Right.
the hardware cost on the inventory I have now, and here is the like 60% higher cost that I will have in a month, and I was like, okay. So yeah, it's having an impact on our industry for sure. It's interesting to watch, but the other thing I will say about it that I found super interesting is that if the intention was to kind of decrease the power of China's manufacturing prowess or whatever,
Right.
it is definitely doing that. Like everybody I talk to is saying like, oh yeah, well we're in the process. We're setting up with a company over in this country or this company.
India is a big one,
Yeah,
right? Yeah.
India's the big winner in all of this, and others. South Korea, there is a company, and so a lot of the hardware companies are like, they're like, well, now we're going to source in all these different countries. So I think that when the dust clears with this, even though people will of course go back to using Chinese manufacturing, ultimately the net result is going to be that they're going to have multiple vendors, though, not just.
Exactly.
So
Exactly. And I think that's
whereas China was getting, let's say, 100% of, let's say, a certain, terminal manufacturing, they're now going to get 30% because the companies realize, hold on, we have to diversify.
and that really, that diversification makes for much better security for the
Better
system.
security, better competition, lower cost overall. Like so I'm very curious to see how it's all gonna, shake out. I'm still very hopeful that within 6 months it'll all kind of settle, but I think
Yeah.
that, but yeah, I think the net result of it long term, I think, is going to be interesting and potentially good to in the market. So
Yeah, and I think this HSBC thing is just the first in a string of initiatives that we're going to see coming out.
yeah, sure, yeah. Well, Patty, always a pleasure. Thank you so much for all the research you do to keep us up to date on the industry for today in payments.
Oh, thank you, James. I really appreciate doing it with you. It's a lot of fun.
Yep. Well, we appreciate you, Patty. Thank you.